Hello, I'm Richard Adcock, founder of Adcock Analysis, provider of technical analysis for market professionals in rates and FX markets. Now in this second video of ours, I'm going to look at how we analyse G10 currencies by using a number of technical indicators and producing a ranking table and ranking score, and how we use that on a day-to-day basis to establish potential directional risks within FX crosses. Now, a common problem that both new and experienced technical analysts will come up against is to know which indicators to use when. Often you'll find that certain indicators will only work well in certain types of market conditions. Also, if you use a combination of indicators, you might find that one will contradict the other, or that prices will have to move a significant amount to mean that the indicators align and give you a solid base on which you can anticipate further price action within the direction of that move. To overcome this issue within FX markets, I've devised what I call my G10 technical rankings. This is a proprietary combination of a number of technical indicators which I believe give strong and consistent signals within markets at all times. At New York's close every day, I calculate the current standing for each individual technical indicator for each currency. The more positive those indicators are, the higher that currency's standing within the G10 rankings table. Once we've calculated each individual technical indicator for that particular close, we obtain a score that ranges between plus 18 and minus 18. The more positive the number, the greater number of technical indicators are showing a constructive backdrop. The lower the number, the greater number of negative technical indicators are currently being seen, reflecting the risk of underperformance for that particular currency. Now you'll notice that the numbers are coloured. This reflects the movement for the particular score on that day. So if the number's coloured green, that means the score is higher than the previous session. Coloured red, lower, and black, unchanged from the previous day. We'll also highlight each individual currency's performance within the rankings table for each session. For example, you'll see that Swedish krona in this particular day fell 3 places to join 10th, not only reflecting obviously a poor session, but the chances of underperformance by the stocky against those currencies higher in the table, in particular US dollar, which is ranked first, Canadian dollar second, and Aussie dollar third. So in other words, those ranked lower in the table are likely to underperform those ranked higher. So by combining the G10 technical rankings together with the FX scorecard that we discussed in our previous video, we're able to focus on the strongest technical viewpoints, not only from a very broad technical indicator backdrop, but also from a more concentrated trending condition. It allows us to see a very quick and easy reference on which particular crosses we should be focusing on and which to ignore, and where the greatest potential is for price movement for coming days or even weeks. Within our FX report on a daily basis, we'll plot charts for each individual G10 currency showing the ranking level and the score backdrop. For instance, this is a chart for sterling going back to the 1st of November 2017. The grey dotted line reflects the ranking level on a daily basis, while the red and the blue line reflect short and long-term moving averages of the score that ranges between plus 18 and minus 18. By doing this, we can see some quite interesting trends developing. When the blue line, the shorter term average of scores, crosses below the longer term red line, we're starting to see deterioration within the relative value for that particular currency. If a decline in score backdrop is seen alongside falling ranking levels, then that's reflecting a significant deterioration within the technical backdrop for that particular currency. So you can see most recently we've seen ranking levels for sterling decline from 1st to 10th fairly quickly, and that's been seen alongside a declining smooth score backdrop. So in other words, the risk is that sterling is set to underperform during this period other G10 currencies, particularly with increasing ranking levels and rising scores. So how can we use these individual charts on a daily basis to reflect potential price movements within individual G10 crosses? Well, let's look at the sterling example again, but this time alongside the smooth score and rankings level chart for US dollar. On April the 24th, having already seen sterling smooth scores declining, ranking levels broke below their recent extreme, highlighting the potential of deterioration for the relative value of sterling. Interestingly, on the same day, April the 24th, we saw US dollar smooth scores cross higher, reflecting potential for an improving backdrop, especially against those G10 currencies that were seeing declining smooth scores and ranking levels, i.e. at this time sterling. In our opinion, this reflected the possibility of cable coming under increasing pressure as the relative value of the two currencies changed. Here we have the chart of cable, with the red arrow showing April the 24th. This was the precise time that we saw sterling smooth scores and ranking levels deteriorating, while US dollar smooth scores and ranking levels improved, highlighting the potential for sterling underperformance against the US dollar. We can see that the following sessions saw such activity materialise. So staying with the cable example, we can see that US dollar smooth scores crossed lower on the 7th of May. Not necessarily a negative signal because ranking levels are still first or second, but certainly showing that the recent strong performance of the dollar is eased somewhat. So we now have declining scores for both US dollar and sterling. Not the type of backdrop that you would anticipate the recent aggressive downside move in cable being continued. So in other words, the risk is that we may well enter into a more prolonged consolidation period after the phase of sterling underperformance. Switching back to the cable chart, but this time the red arrow reflecting May the 7th, we can see that when both US dollar and sterling smooth scores were declining, the cable entered into a consolidation period as a reaction to its recent downside. So in other words, the relative value for both currencies was declining within G10, increasing the risk for a consolidation phase. This is likely to remain in place until we see either sterling smooth scores or dollar smooth scores crossing higher again, reflecting an improving technical backdrop for that particular currency and the potential for it to outperform once more. However, don't forget, throughout this period, sterling has still been ranked 10th, while the US dollar has been ranked 2nd within G10, suggesting that the US dollar can continue its outperformance for a more prolonged period of time. So if we were to see US dollar smooth scores crossing higher, this would be an extra weight for further downside risk and potential of weakness developing within cable once more. Hopefully now you have a good idea of how we use a combination of technical indicators within G10 to establish a ranking and ranking score, and how we can use these to establish potential price movements within a number of G10 crosses. If you'd like a free trial to our FX service, please go to our website at www.adcockanalysis.com and click on the register button to give your details for your free 2-week trial. Or, if you have any questions about this approach or any of our services, please contact me at richard@adcockanalysis.com.